Hey traders, it's been several days since my last video update, and given what I'm seeing on the charts right here tonight, I thought it would only be appropriate to record a quick but actionable video ahead of tomorrow's session. Tomorrow is Treacherous Friday. Okay, so what is it that I'm seeing on the charts this evening that warrants a video update ahead of Friday's session? Now recall that I've been recently tracking the progress of a 5-wave structure, one that emanated from the August 7th low, of course. And for that purpose, I've been using Ian Copsey's harmonic Elliott wave model, not the classic Elliott wave model. The difference being that in the case of the harmonic Elliott wave model, waves 1, 3, and 5 each subdivide internally into an ABC zigzag. In the classic model, of course, waves 1, 3, and 5 each are composed of 5-wave subdivisions, or 5 subwaves internally. Now clearly I labeled the first zigzag off the August 7th low, wave 1, followed by wave 2, which retraced 41.4% of wave 1. This 41.4, by the way, is an obscure ratio based on Pythagoras's constant, square root of 2. Now the next zigzag, A, B, and C, I labeled this one as wave 3. And then last Friday's rug pull that ended shortly before noontime is wave 4. It wasn't as deep as I had expected it to be. I thought it would come all the way down here somewhere. But anyways, because wave 4 wasn't as deep as I expected it to be, there's another wave coming that will fill those shoes. And let me continue. I'll show you exactly what I mean. Okay, so we know that wave 4 ended sometime midday last Friday. And now wave 5 must be underway, of course. And wave 5, based on Copsey's harmonic Elliott wave model, should also subdivide into an ABC, just like waves 1 and 3 before it. Therefore, what must be unfolding right now is wave A of 5. To make a long story short, I expect wave A of 5 to end in the coming hours, maybe Friday morning, somewhere in the vicinity of the 40-60 level. And I'll tell you why. I've been tracking the subdivisions of wave A of 5. Wave A of 5 should subdivide into 5 waves internally. And here I identified wave 1 and 2. Wave 3 appears to have ended exactly at the 2.618 extension of wave 1, meaning wave 3 was extended and reached a size of 2.618% the size of wave 1. And wave 4 here was brief. Why? No one wants to sell. No one wants to sell. And from this wave 4, wave 5 got underway. Now, when I take the total size of waves 1 through 3, meaning I measure the distance from the start point of wave 1 to the end point of wave 3, and I multiply that by 0.618 or 61.8% and project the result from the bottom of wave 4, I reach this area, the 40-60 area. Now, I also identified here a classic pattern, an ascending broadening wedge. Okay, actually it's not a wedge, it should say ascending broadening formation, or right angled ascending broadening formation. That's a correct name for it. Let me fix it here. All right, here I fixed the name of the formation. It's really a right angled ascending broadening formation, which could also be interpreted as a double bottom. Either way, the measured move is the same. You measure the distance from the lowest valley to the highest peak, and you project that from the highest peak. And what do you get? About 40-60. In line with the ideal Fibonacci target for wave 5 of A. Interesting, right? But watch this. This area, that 40-60 area, has been in play since late May. Late May. Let me show you why. Okay. Here's why. In late May, we identified the cup and handle formation, a classic formation that confirmed the bullish breakout in early June. It broke above the cup rim. Now, the upside objective of the cup and handle is, of course, the height of the cup projected upwards from the rim itself. You basically double the size of the cup. What do you get? 40-62. How close is this to the 40-60 target shown on the previous chart, the 10-minute chart? Pretty darn close. Now, this rally started here on August 7th and will probably not end until we reach the top of this yellow channel sometime in the coming weeks. Now, recall what I said when I was discussing the previous chart. Let me go back to it. Okay, so what I said is that on Friday, we're likely to see the end of wave A of 5, not all of wave 5. Remember, wave 5 should subdivide into a zigzag. Therefore, once wave A has been confirmed and wave B gets underway, I expect wave B to be a deep wave, to retrace as much as 61.8% of wave A of 5. And the reason being, wave 4 wasn't deep enough. Okay, and neither was wave 2. So whenever wave 2 isn't deep enough, it was only 41.4. And whenever wave 4 is not deep enough, oftentimes it's wave B of 5 that fills those shoes. And by deep enough, I mean anything above 50%. So let's say about, I don't know, somewhere in the vicinity of this dashed red line. Okay? Could be the edge of the open gap, could be a total gap fill, could be the top of wave 3, but somewhere around here is where I would expect wave B to end and set the stage for wave C of 5. How far up? That's a discussion for another video, but let me remind you what I said in the previous chart. And what did I say concerning this chart? I said that the current rally that began on August 7th would probably try and challenge the top of this yellow channel. Okay, that's what I said. Therefore, when wave A is over near 40-60, we're going to see a small pullback and then another rally towards new highs. I don't believe, though, that it will touch the yellow line this time around. Now, the blue rally here is one that started in mid-April. Okay, and it has not ended yet. I'm going to show you where it's going to end in the next and final chart. All right, I'm getting tired, so this is the final chart featured in tonight's video. The weekly chart of the Nasdaq. you should somewhat be familiar with this chart, because if you got to watch prior videos of mine, you know that I've been tracking a 5-wave advance that began over 2 years ago, early June 2012. Now, the third wave ended in early March of this year. The fourth wave, mid-April. And then from mid-April, Black Wave 5 got underway. It's the final move to complete this 5-wave advance. Now look, no one's got a crystal ball to forecast every single twist and turn. But let me tell you something. Choppiness is around the corner. You're going to see choppiness again as early as tomorrow, Friday. Why? 2 reasons. First, recall that at the start of the video, I made a solid technical case for why the 40-60 area will probably mark a turning point. And I said that this turning point will probably come as early as Friday morning when we hear from Jackson Hole. Perfect time for the market to sell the news. And if the sell the news event does materialize, expect a 60 to 70 point decline on the Nasdaq 100 before the uptrend could resume. It will surprise everybody when it does that. Now let me ask you a question. Does it surprise you to see the index close above the upper yellow trend line for 2 or 3 consecutive days this week? More importantly, will this weekly bar close above the upper yellow trend line? I suspect not. I believe that Jackson Hole is behind this unusual strength, and once the news is out tomorrow morning, a sell-off will get underway, 60 or 70 points. So I'm expecting price to close below the yellow trend line on Friday. Now listen, no one's got a crystal ball. Anyone who claims to be in possession of one is probably a liar, a cheat, and a fraud. Call him whatever you will. As far as I'm concerned, I'm giving you my best effort read of the chart using sound technical analysis principles. Sometimes I'm right, sometimes I'm wrong. My hope is to be more right than wrong in the long run. All right, so here's what I believe, or what I suspect might happen in the coming weeks. Now, once again, listen, I'm trying to give you my best effort read off the chart. Okay, this information has 0 tradable value. All I'm doing is I'm using technical analysis principles to look several weeks ahead at what price is likely to do based on what it has done in the past. Okay, 0 tradable value at this point. Now, what I suspect to see is a lot of backing and filling, on the way to the Blue Wave 5 target. Well, what is that target for Blue Wave 5? So how do you estimate the ideal target for Blue Wave 5? Simple. You take the total distance from the starting point of Blue Wave 1 through the ending point of Blue Wave 3. You multiply that by 61.8%, and you project the result from the bottom of Blue Wave 4. And when I did that, I got a target that overlaps the lower boundary of this gray area. This gray area is the ideal target for Black Wave 5. And that's done the same way. That target is estimated by taking the total distance from the start point of Wave 1 through the end point of Black Wave 3. You multiply it twice. The first time by 61.8%, the second time by 76.4%. And you project the 2 results from the bottom of black wave 4, and you get this black area. Now, for blue wave 5, I only did one calculation, the 61.8%, because I figured that once we reach the lower boundary of this black area, this thick zone, we're probably going to retreat. Okay. Now, I suspect we'll get there by trudging along the yellow trend line, sometimes exceeding it, sometimes not. We'll see. We'll just trudge along this line until blue wave 5 decides to end. Sometimes it might end at the 50% or 38.2% projection, not necessarily the 61.8%. Again, I have no crystal ball. Okay, so we have to trade all these things as price develops in front of us on the screen. Okay, as price is unfolding and patterns are forming, we're going to take the trades accordingly. Anyways, now I thought about it and I said, all right, well, based on the Ian Copsey harmonic Elliott wave model, wave 5 should subdivide into a zigzag. And so once wave A ends, black wave A ends, upon the completion of blue wave 5, we should see a deep pullback in black wave B. All right, a sizable pullback. What would be the catalyst? Let's say that blue wave 5 ends by Labor Day, around that time. What will cause wave B to get underway? And I thought about it. I figured either midterm election issues, a lot of overseas issues, geopolitical issues, wars, who knows, anything. But once this black wave A ends, anything that is on the radar is going to be used as an excuse to get wave B underway. Again, geopolitical concerns, midterm election, BS, who knows. Once wave B is over, I suspect the final wave C of 5 to get underway, and this is when this 2+ year rally will come to an end, giving way to a sizable correction. So I suspect 2015 to usher in a sizable correction. All right, again, what did I say? Zero tradable value. Zero tradable value. Whatever info I gave you here towards the end of the video has zero tradable value. I cannot emphasize this more. All right, well, you guys have a great evening or a great night, whatever time. What time is it? It's almost midnight on Thursday. And to take a quick look at the futures, here we go. Nasdaq 100 is up to what? That's the futures, by the way. It's reached as high as 40.5250. And our target is somewhere up here. Assuming there's a couple of point difference between the September contract and the cash index. So we're going to see a reaction to the upside probably. And then from here, we're going to sell down with a vengeance. All right. See you all tomorrow morning.